Welcome back to Explain the Charts, where we aim to deliver insightful, data-driven analysis to empower your trading decisions. Today, July 21st, 2025, we're putting the S&P 500, tracked by the SPY Exchange-Traded Fund, under a magnifying glass, examining both the latest market news and dissecting its comprehensive chart data. Our goal is to uncover potential trends, identify key price levels, and discuss reasons to be bullish or bearish, both short and long term. The market sentiment is currently tinged with anticipation, as stock futures are pointing higher ahead of a pivotal week dominated by big tech earnings reports, a key driver for the broader index. Adding another layer of complexity and potential volatility are the ongoing trade developments, with the White House's persistent focus on tariffs keeping investors attentive to any new policy shifts. A significant recent corporate event impacting the index is the inclusion of fintech innovator Block into the S&P 500, slated for July 23rd, which has already sparked a nearly 10% surge in its stock price. Such index rebalancing can create targeted buying interest and shift sector weightings, providing a subtle but influential tailwind for the overall S&P 500 performance. From a broader performance perspective, the S&P 500 has been nothing short of impressive, recording a robust 10.57% return over the past 3 months, a figure that significantly outperforms its historical long-term average. This sustained upward momentum has propelled SPY to trade remarkably close to its 52-week high, with current real-time data showing the index just under 630, specifically at 629.79, nearly touching its peak of 631.61. It's important to acknowledge that our detailed candlestick data for SPY officially concludes on July 18th, showing a close of 627.58, indicating that the market has continued its ascent since our latest charted candle. Turning our attention to the overarching daily chart for SPY, a clear and undeniable bullish trend has dominated the landscape for an extended period. Since early 2024, the index has consistently forged a pattern of higher highs and higher lows, illustrating sustained buying pressure and investor confidence in the market's direction. A particularly dramatic event unfolded in early April 2025, where SPY experienced a sharp, albeit brief, correction, with prices plunging from above 560 to a low of 481.80. This significant drawdown was accompanied by elevated selling volume, indicating a strong bout of profit-taking or risk-off sentiment during that period. However, the market demonstrated exceptional resilience, staging a powerful V-shaped recovery that not only erased the losses, but decisively pushed SPY into new all-time high territory. This strong recovery, further supported by a surge in buying volume, confirmed the underlying strength and the willingness of market participants to buy the dip. Historically, price levels such as 520, 560, and 600, which previously acted as formidable resistance, have now transformed into critical support zones, confirming the bullish breakout. Currently, the immediate overhead resistance for SPY is the band from 628 to its 52-week high of 631.61, a level that bulls are actively challenging. A definitive close above this 631.61 mark, especially accompanied by strong volume, would serve as a powerful signal for a continued rally, with no immediate resistance to project. Conversely, if SPY struggles to break through the ceiling and shows signs of exhaustion, potentially forming a double top or bearish engulfing pattern, it could trigger a short-term pullback. The consistently high transaction counts, particularly on upward moves, reinforce the conviction behind the prevailing bullish trend, suggesting institutional participation. Now, let's refine our view to the 1-hour chart, focusing on the recent price action from early July to discern the market's medium-term rhythm. Following its strong performance in late June, SPY entered July by consolidating around the 616 to 617 level, establishing a temporary consolidation zone before its next move. Subsequently, The index resumed its upward ascent, showing a steady climb towards the 625 to 626 range, characterized by generally consistent hourly trading volumes. Observe the relatively shallow pullbacks throughout this period, notably on July 7th, where the price found reliable support near the 619.50 level, quickly attracting buyers. This consistent pattern of modest retracements followed by renewed bullish momentum is a hallmark of a healthy uptrend, indicating robust underlying demand. The 620.00 level has emerged as a significant psychological and technical support on this hourly time frame, acting as a bounce point after several tests. As we approach the end of the hourly data on July 9th, the candles reflect a period of tighter price action and somewhat reduced volatility, suggesting indecision or a period of accumulation ahead of a potential larger move. This tighter consolidation is a classic setup, preparing for a potential breakout or breakdown depending on the next significant catalyst. For the most granular insights, let's examine the 15-minute chart, specifically focusing on the trading activity during July 18th, the latest data available. During the early trading hours (UTC), SPY largely traded within a narrow channel, fluctuating between approximately 628.50 and 629.30, indicating a short-term equilibrium. Around the midday session, we witnessed a notable test of the 627.50 support level, which held firm as buyers quickly stepped in, preventing a deeper decline. The subsequent rebound pushed the price back towards the 627.90 area, concluding the charting period in a remarkably tight range, characteristic of waning momentum or a coiled spring. The decreasing transaction volume towards the very end of the trading day on this time frame suggests a lack of strong conviction from either buyers or sellers, awaiting a clear catalyst. For nimble short-term traders, a decisive break above 629.30, particularly if accompanied by a surge in volume, would present a clear long entry signal targeting new highs. Conversely, a breakdown and sustained trading below the 627.50 level could indicate a shift in short-term sentiment, potentially leading to a retest of the hourly supports around 625.00 or even 622.00. Observing the size of the 15-minute candles is also key. Large-bodied candles on high volume suggest strong directional conviction, while small, tight candles signal consolidation. Always confirm your entries and exits with volume and consider the overall market context from the higher time frames for better trade probability. After dissecting SPY across multiple time frames and considering the latest news, let's synthesize our outlook. Are we leaning bullish or bearish, and what key factors should we be watching? The long-term outlook for SPY remains overwhelmingly bullish, underpinned by the compelling long-term chart structure of consistent higher highs and its impressive recent performance metrics. The market's demonstrated ability to quickly absorb and recover from significant sell-offs, as seen in April, speaks volumes about its underlying strength and demand, which is a very positive sign for patient investors. In the short term, while the current consolidation introduces a degree of uncertainty, the prevailing sentiment is still cautiously optimistic given the upcoming earnings season. Strong Q2 earnings reports from major S&P 500 constituents, particularly the big tech giants, would serve as powerful catalysts, easily fueling a breakout to new price records. Furthermore, the block inclusion event, by adding a dynamic fintech company, contributes positively to the index's composition and overall bullish narrative. The critical bullish signal to watch for short-term is a clear, high-volume breakout and sustained trading above the 630 to 631.61 resistance zone, validating the current upward trend. However, every bullish argument must be balanced with potential risks. Trading near all-time highs inherently carries the risk of profit-taking, which could trigger sharp, sudden pullbacks. The unresolved trade tensions and the possibility of renewed tariff escalations pose significant macroeconomic headwinds that could quickly turn market sentiment bearish. Technically, a clear rejection at the 630 to 631.61 resistance, perhaps forming a bearish divergence or a significant bearish engulfing candle on the daily chart, would suggest weakness. More critically, a sustained breakdown below the established 620 to 622 daily support levels, especially if accompanied by abnormally high selling volume, would invalidate the immediate bullish setup. Such a breakdown could potentially lead to a deeper correction, with the next significant support target being the 590 to 600 zone, a level that held firm as resistance multiple times in late 2024 and early 2025. To recap the most important price levels, the immediate battleground for buyers and sellers is the 630 to 631.61 resistance area, representing the all-time high. The first line of defense for bulls and crucial short-term support is positioned firmly at 620 to 622. For long-term traders, the 590 to 600 level represents a robust historical support, signifying a major pivot point. Regarding unbiased predictions, the probability of SPY extending its rally and setting new all-time highs in the immediate future appears quite strong, arguably around 70 to 75% likely. This bullish outcome is heavily reinforced by positive surprises in big tech earnings and any de-escalation of trade war rhetoric. Conversely, the likelihood of a notable pullback to the 620 to 622 support, or even the 590 to 600 zone, is approximately 25 to 30%. This downside scenario would gain traction if corporate earnings widely disappoint or if unforeseen negative geopolitical events unfold, prompting a market correction. Beyond price levels, always scrutinize volume. A true breakout or breakdown is almost always confirmed by a significant spike in trading activity, indicating strong conviction. Keep a close watch on the upcoming Q2 earnings reports and any major announcements concerning international trade policy, as these are the primary catalysts for the market's next move. By integrating this blend of fundamental news and technical chart analysis, you'll be well equipped to make more informed and strategic decisions when trading SPY.